Hello traders, Joseph here again. Thank you so much for joining me on another edition of my weekly video. Now this is the first time that you're watching this video. I'd like to welcome you. Just to let you know, this is something that I usually do every weekend, where I kind of like talk about a few trade setups that I'm going to be watching as we head into the following week of trading in the forex market. So if by the end of this video you like what you see, then please leave a comment, share it, subscribe, or do anything that helps really. So let's go over to the chart, and I'm going to show you guys a couple of trade setups that I'm going to be watching. So the first trade setup is we've actually got two trade setups on this currency pair. Is the dollar against the Swiss franc. One is just a break and a retest, actually just pure structure really, resistance and support. So let me go ahead and show you guys what I'm going to be watching. So I just want to focus on this area. I want to focus on this whole area where the market came into a bit of a consolidation, and we broke structure to the upside, and then we came back down to retest this previous structure support right here. So the market has since rallied, and now it's coming back down to the same structure. Actually, it came back to the same structure and it rallied again, and then it's coming back to the same structure. So there is a chance that we might get like a trend continuation trade on this, just purely based on break and retest or resistance and support. So this is actually going to be a good opportunity. So let me just try and mark this area, which is the important area on this chart, because we had the market come into this area, look, 1 2 3 4, and it's coming back down into this area for the 5th time. So we're looking for this market to come back into this red zone, and then bounce and go back up to at least test this previous structure here. But this is not a trade that I'm going to be taking, simply because of the risk to reward ratio doesn't really suit me. So let me go over to the 4-hour chart and show you guys, if you're going to take this trade, what you're going to have to, although the risk to reward ratio is greater than 1 to 1, I think the pip range is way out of it's way out of the range that I usually trade. So if you're going to be trading this this structure, you're going to have to put your stop loss way below this. The whole consolidated area, you're gonna have to put your stops way below there, and that's over 100 pips, because if you get into this trade around 99, hopefully just 9900, you're gonna be looking to put your play stop around 97 30s, but that's about 170 pip. So for me, it's way out of my range, even though the reward in this trade is greater than the risk, but the pip range is just not for me. So we've got, you're gonna have to be looking to take your first target around 10120s. So in terms of the risk to reward ratio on this trade, you're looking at something, it's actually just over 1 to 1, so for me it's not really a trade worth taking. So but however, if I drop this down, let me go ahead and delete all of these things, and I'll drop it down to the 1-hour chart, because we actually have a potential advanced bullish Gartley pattern setting up on this pair. So if I go over to the 1-hour chart, now this is the one that I'm going to be really interested in. We've got a potential Gartley pattern that's yet to be completed. So if I go ahead and draw my Fibonacci retracement X to A leg and bring in my triangle, so we got an X to A leg, a 618 retracement, A to B, so B to C leg. So we've got the 127 extension should terminate somewhere there. I'm gonna bring in my Fibonacci just to confirm it. So we're looking at the 127 extension. Look at it, guys, just a little bit above that. When you do these things every day, it kind of becomes second nature to you. You kind of know where the extensions are going to be. So in terms of this Gartley pattern completing, we're looking for this Gartley pattern to come back down into our 98.70s. This is actually a trade that I'm going to be looking to get involved, because this is actually going to narrow down my pip range in terms of stop loss. And we've also got a bit of structure support right here looking left. But it's a big if we are going to get down here, because like I mentioned before, we've got a very important structure right here where the market has respected a couple of times. So there is a chance that this market this Gartley pattern may never be filled. However, that's the chance I'm willing to take. So I'm just gonna keep watching this trade. as we head into the next week of trading. And hopefully if this market comes back down to this godly pattern, I will be taking this trade. And yeah, so the next currency pair I want to look at is the euro dollar, and I'm gonna take that one all the way to the 4-hour chart. I think this is one of the currency pair that I did analyze in my weekly video last week, where I talked about a potential godly pattern, potential bearish bat pattern that is going to complete. Oops, what's happening? There you go, we got the X to A to B leg. However, my last video I did identify this area where I expected the market to come into this area and then reverse and go back up. Let me just bring in my Fibonacci retracement just to confirm that's the 886 retracement right there. Yep, we can see coming in just above that. So that's where our bat pattern is going to complete. So as I was saying in my last video, I did point out this area where I expected this market to come into this area and reverse and go back up, but we didn't get that. However, our bat pattern is still valid, because guys, if you remember, the B leg of the gap, that's not the C leg of the bat pattern, it can touch the 382, the 618, the 50%, the 886 or the 786 retracement, as long as it doesn't touch A. So as long as this market doesn't comes here and touch this part of the godly pattern, then it's still valid. So this is still very much a valid bat pattern in the making. So if the market can get all the way up there, it's going to be a very, very nice trade setup. And we do have another pattern setting up on this pair, and it's actually a godly pattern. So I'm going to go ahead and bring in my, I'm going to go ahead and draw that before I bring in my Fibonacci. We got the X to A leg, A to B leg. So that was the 618 retracement. B to C. So assuming this market terminates here and falls back, then we're going to look for a godly pattern to complete somewhere down here, which is going to give us a very, very nice risk reward ratio. So just bring in my Fibonacci. So we got a godly pattern that's going to be terminating around 10600. So yeah, so either way, whichever way this market goes, we do have a couple of trade setups that we're gonna have to keep watching. But if this market continues to go higher, if it goes ahead and break this previous structure support, then I would be looking for a trend continuation opportunity all the way up into the bat pattern completion. And if it breaks this structure, it's going to mean that our godly pattern has been invalidated, because as you remember, C cannot touch A. So if this market continues to go higher and touches this point, or even breaks and close above that point, then the godly pattern is going to be invalidated. So yeah, it's definitely something I'm going to be keeping an eye this week. So yeah, guys, as you can see, there's not much on my radar really in terms of good trading setups. Just a couple. And however, if you're following me on TradingView, I will be posting some of my trades this week, just like I did last week. So if you're following me on TradingView, and if you're not following me on TradingView, the link to my TradingView profile is at the bottom of this page. All you have to do is to go on the profile and then just click the follow button. It's free of charge, and you get to see all my trades setups as I post them on TradingView. Yeah, so that's it for now. In the meantime, just keep it simple, and until next time, I'll talk to you soon. Bye.